Happy Friday, traders. It's 8:01 a.m. Chicago time um, on Friday, the 26th of February, 2016. Thanks for joining. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight, with oil being up about 4%. Now it has pulled back. It's up about 3% from yesterday, up 99 cents to a dollar. With gold being down about 0.61%, Treasuries down 1%, the bond futures down 1%, and the tens down 0.48%. Eurozone Bund down 0.1%. The Chinese, the Asian markets, Nikkei up 0.3, Hang Seng up 2.52%, Shanghai up 0.95, and Japanese yen futures down 43 bips. Equities, the DAX is up about 2%, FTSE 1.5% or so, and same with the CAC. U.S. equities up about 0.74%, and the U.S. dollar up 39%. So overall, combined, looking at just the total consolidation of those assets, the conclusion is that risk appetite is high. So the market allocation is going more towards more risky assets, and it looks like it's being driven by energy again. Also, strong inflation numbers out of Germany and strong housing price numbers out of China have really pushed the overnight market higher. We did see it top off. We'll show that in a minute. We saw it top off and pull back when the economic confidence in Europe came out as the lowest since June. Also, Japan's inflation was completely flat at 0%, so they're still dealing with the deflation cycle. But then at 7:30 here, about a half hour ago, the U.S. reported strong quarter-on-quarter annualized GDP of 1%, higher than expected, pushing equities to new highs on the overnight session. So there's a lot going on here for this for Friday. Let's switch gears here. As always, for those who are sticklers about accountability, I always go over what we covered in the day before. So you can see here, this is yesterday's video. This is our primary hypothesis. I did warn, if you go to yesterday's video at about 16 minutes in, I did talk about the high probability, or the higher probability being hypo 1 of pushing to 39 and beyond, consolidating at 39 and beyond. And I did warn the bears or the shorts coming into the session. The market did sell off on the open, and it came back. Essentially, what the market did is it played hypo 2, which is actually discussed about 18 minutes in. So there's hypo 2 right there. The expectation on hypo 2 is it would push down into the 2275 area, which was the MC point of control. So yesterday what it did is it played out hypo 2, balanced, and then it found buyers, and it played out hypo 1 in the next sequence. So overall, the plan was okay, in that the expectation, the overall plays were there, and we had some pretty good chances to get on. I'd love to cover that. I'd love to do the walk back and walk forward of how trades set up, but these trader bites are not intended to take all morning. Right now, the way things are setting up, we have about, when I was updating just now, we had about a 13-point gap from yesterday's close. It's come off a little bit. The overnight session, if we look at it, here it is, pretty much flat on the reopen. The market yesterday closed very strong. So when we look at yesterday's action, We had a very strong close here. You could see that there was a lot of volume that went off right at the high of day. This, as I've been talking about for years now, this portends a continuation higher overnight. Generally, we take out the high when we do that. And the reason for that is the auction did not actually get high enough to find its sellers. Instead, it got cut off through time. And believe it or not, well, at least what I believe is that time is really not an important reference in the market. It is price and volume. Time does affect the market in terms of when certain products trade and when they stop, but also when economic releases or news comes out. But overall, time as part of the auction is just something that creates a pause effect rather than a reversing effect. So the expectation was for it to continue higher coming into the overnight session, the extended trading hours, and it did. So we have this sideways push, and then it finally takes off. It finally takes off and then makes that high at 68.75, and it starts to pull back on the European news, and then we make this a secondary attempt at the high just now with the GDP release, and we have a lower high in the market. Looks like it has a P-shaped profile, which is short covering, indicating the potential for short covering. The thing with this short P-shaped short covering type of thing, the market, as always, as I always say, tends to move up until it finds sellers. That is the primary purpose for moving up. The reason we uptick is to entice sellers, is to advertise a seller price and entice sellers to act into the market. That is the aggregate effect of an uptick. That is not the reason buyers buy or sellers sell, but that is the aggregate effect as the market seeks higher prices by seeks sellers by pushing higher, seeks buyers by pushing lower. And what we have here is a classic corrective failure. Looks like it's about to happen. So the expectation this morning coming in, let's see, the gap now is about 10 points. Yesterday's close was 1050. So the gap statistic, it was 13, now 10. The gap statistic is 22, as you could see down here. This is the gap stat. So this chart just looks at 2,000 days of trading, and it's looking for 10-point gaps that I just entered, and it computes how many closed versus how many it found, and it gives us a statistic. This is a gross statistic, an aggregate statistic as to the gap closing, a 10-point gap closing in either direction. The probability is 22.25% right now. Again, this is a gross statistic, but the way the action is shaping up right now is that we are pushing into some pretty thick territory. Let me just pull up the daily. So let's extend this profile forward. Okay, so this is the master profile for this area, this bleeding red profile, and we have pushed into that 64 area, and we traded into that area overnight. We pushed all the way up to 68, and right now 69 was that the high before before the drop at the beginning of the year, the high of the 7th. We were just a tick short of that, but we are pushing into the 64 high volume node right here. So once we took out, so that's where we're trading right now. So once we took out this 43 area yesterday, 43.75, we're starting to make our way to the next high volume node. That's the auction process. Can't draw an arrow. So that's what we're shooting for here, and it was attained overnight, but this is a day session, so it's still valid. The cutoff point is 43.75. The upper cutoff point is 73-ish. 72.50, and that's where we're auctioning today, folks. Those are the key areas to watch. A drop below 43.75 is likely to pull us back into where we were before. So a drop below 43.75 targets a short range 39, 39 being this high volume node. Wow, that is a wild arrow. Um, the 39 uh, point of control. That becomes the next target, and then we start to work through yesterday's profile again, all the way down to the all the way down to this large, um, um, the short-term point of control, 2275. Sorry, I can't get the words out. Um, so that's how things are shaping up. So the primary hypothesis is it is likely to be a choppy open. I'm expecting an open auction out of range. There is a good reason for participants, for buyers to step in. There's a good reason for sellers to step in. I expect it to be fairly choppy, pretty aggressive. I expect a high time frame participating in the market, what we call OTF, to participate in the market, but the expectation is an attempt higher, failure, and then for it to start moving down towards yesterday's range. That is a primary hypothesis. I'm looking for it to base and then pause and then just be stuck. I expect it to be stuck in this range today. I do not expect it to fly high or continue to take off. We have had a pretty good run this week. It is a Friday, and the expectation is some of that is likely to balance out, and I expect it to stay in a fairly tight range today. It's 8:13 in Chicago, 13 minutes past the hour. I'm going to cut the video off here. The second hypothesis is an immediate attempt down, chop, reverse, push higher and out and through, but I expect the 64.75 to put a cap on things this morning. So that's it. Hopefully you've had a good week, and more importantly to me, hopefully you have gained something and have learned something about yourself and about the way you trade to apply and profit from it. Good luck. Have a great weekend, and it's Friday. Do not put a hole in your account and have to live through it for the weekend. Just take it easy. Do the best you can to be selective. Take it easy, and take off early if you have a good day. Take care.